Let's start this afternoon with our flagship leaders panel, where industry decision makers will share their vision for 2023. Leaders Spotlight, insights from behind the scenes. Please welcome on stage the moderator Kaya Reed Puff, Chief Investment Officer at CreditLink AI, who will introduce the panel. Kaya, the floor is yours. Thank you.
Hello, good day everyone. Thank you so much for joining us. Thank you iFX for having us on this panel discussion. Thank you Duska for organizing everything. We have a panel of absolute superstars in the industry. As you can see, their titles are very fancy as well. But I'm going to allow them to introduce themselves. Maybe a couple of minutes. What do you do? What does your company do? And how did you end up at iFX?
Sure, absolutely. Thanks a lot for the introduction. Essentially, my name's Neil Tan. I'm the chairman for the FinTech Association in Hong Kong. We are the largest FinTech association within Asia, over 1,000 members, 300 corporates, namely HSBC, TransUnion, so on and so forth. Essentially, what we do is we are the super connector inside of the Hong Kong FinTech ecosystem, so connecting all of the banks, and insurers, and finance, as well as the FinTechs, and also the accelerators, incubators, and the universities together. My background is 20 years of experience inside of strategy, M&A, biz dev. I used to work at HSBC as the head of digital partnerships and innovation. I've also worked at Deutsche Bank as a TMT coverage banker. And most recently, I was the CEO for a company called Neptune Digital, which is a Web3 blockchain company deploying NFTs, gaming, metaverse projects inside of China. So thank you.
Thank you. Mario.
Hi everyone, I'm Mario. I'm founder and chairman of Fullerton Markets, one of the fastest growing brokerage firms in Asia Pac. We are a multi-asset broker, so in terms of all the different financial instruments for stocks, CFDs, crypto, indices, bullion, currencies, we have all of them. That's the day job. In terms of what I enjoy doing, I'm a writer. I've written 4 books, the last one being an Amazon #1 called The Magical Rule of 3. I enjoy just putting my thoughts into paper. In my own free time, I run a family charity with my wife in Singapore. It's called Soul Rich Foundation. Really absolute pleasure being here. Thank you.
Surprised to even have free time after everything else that you do. Matt.
Thank you. I'm Matt Maloney. I'm the CEO of Finalto Group, so I'm responsible for our regulated business, not just in Singapore, but in the UK, in Cyprus, Australia, South Africa. We are a broker offering both B2B liquidity and risk management and B2C products to retail customers through our markets.com brand. Second time here in Bangkok, and it's a real pleasure to be back seeing how the Expo is growing year on year.
Thank you. Ben?
Yep, thank you very much. So my name is Benjamin Chang, and I'm coming from EXPO Asia. So based in Hong Kong, actually. So here in this panel, we got 2 people from Hong Kong anyway. So for EXPO Hong Kong, EXPO Asia, actually, we are providing trading solution in terms of currency trading, and for past 10 years. And for my personal, I work in the currency industry for more than 20, I think it's 20 years already. And yeah, that's something about me and the company. Thank you.
Thank you so much. So today we're going to talk about fintech and trends in fintech because we have all the experts on the panel. I encourage everyone to ask questions. At any point, feel free to put up your hand. We hopefully have a few minutes at the end of the discussion for Q&A as well. But let's talk a little bit about fintech trends in Asia Pacific. So we all know that Asia Pacific tends to leapfrog in terms of development the rest of the world, whilst we are maybe slightly behind of what's happening in the US and Europe, but when we do something, we do it really fast. So maybe we can have the first question around the trends. What are the trends you have observed in Asia Pacific, and how do you see these trends shaping the industry in Asia Pacific and globally? And we're going to start with Neil, please.
Sure, absolutely. So, my view is inside of the context of Hong Kong and Greater Bay Area, so inside of China. When we take a look at the different trends inside of that, of course, Hong Kong is an international financial center, IFC, and we have 4.5 trillion US dollars in AUM inside of the market. We also are #1, 7 out of the 10 years in terms of capital markets, so we have a lot of liquidity, also distribution there. The key trends for Hong Kong is, #1 is obviously, if you haven't heard, about digital assets, right? So, the issuance of the virtual asset trading platform license. So the SFC has already issued that and is already taking applications. A number of different players have already raised their hands, like OKX, Huobi. DBS is also coming also inside of that lineup, if you will. We also have other outside players like Greenland Holdings, which is an SOE in China. That's a real estate holder. So we've got that as a key trend. The second key trend inside of there is really inside of green bonds and blue bonds. So a lot of ESG. Hong Kong has been able to become the center for, at least inside of the context of Greater China, to facilitate a lot of the different transactions that are coming cross-border, right? This is an international platform for people to access those types of issuances that are Chinese-based. That will be also built on blockchain, so it's also leveraging a lot of the technology inside of that space. And the third thing is when we talk about RegTech, obviously when you talk about creating a greater Bay Area, you've got Hong Kong, you've got Macau, you've got China, which is 9 different cities inside of that. How do you come up with a regulatory framework that covers 3 geographies, even though they're all inside of China, right? So each one has its own jurisdictions. So I think this is probably the third major trend that's happening inside of Hong Kong at this point.
Okay, Mario, what are your observations?
Yeah, I sit in Singapore, and I think one of the interesting things is that Singapore has been recognized as the 3rd largest financial center in the world, right after London and New York. So it's in a very specific place that attracts deep liquidity across all sectors of the capital markets. But in terms of broad trends for fintech, I lay out 3. Neil had 3, which is brilliant. So these are like some of the major buzzwords that you see being thrown around, right? There's blockchain, there's AI, or generative AI, as I would speak. But I think one thing that for us who are now based in Southeast Asia, I think one of the key things that we all need to be looking at is the digital economy itself. One report I want to share with everyone, I've always been looking at this report. It's a report that comes out of Singapore that is co-written by 3 organizations, Temasek, Google, and Bain & Company. So this report is called the Economy C Report, which talks about, of all the 10 nations in ASEAN, what really are some of the emerging trends? And one key thing, guys, that we all cannot afford to ignore is obviously the digital economy, right? And in that specific report, it talks about the major 6 economies in ASEAN, Thailand being one of the 6, Vietnam obviously being the other, Singapore and Malaysia. So I think in terms of the digital economy, and if you break it down specifically, just some nuggets for you guys to take away, there's online media, there's ride-hailing as they speak, but something that we are all connected in here is financial services. So financial services is something that is going to be a key pillar, obviously in terms of fintech trends, and in terms of the size of that whole entire economy, it looks like it's going to hit like $1 trillion in the next 7 years. So I was speaking with Kaya just now earlier. I think payments under the entire financial services is something no one can afford to ignore. All right, so fintech trends, 3 broad things, blockchain, AI, these are buzzwords you hear, specific into the digital economy, and then payments, whether is it banking as a service, whether is it DeFi, whether is it mobile payments. I think payments is something that kind of pulls everything together, right? If you think about it, whatever pillars you want to be in, you've obviously got to have payments as a solution.
Super interesting. Matt, what are your views on that?
Thank you. So I'm incredibly privileged to lead a global business, and what we see, whether we're talking about Asia Pacific or the wider world, is that increasing demand for personalization, a bespoke service. It's no use just trying to pump out exactly the same product globally. You've really got to think about each of the target audiences, your local geography, right from the inception of a client relationship. How do you go out and how do you market? What specific payment requirements are there? What liquidity needs are there? What risk management solutions? Localization of the platform, the languages that you need to support a customer. So whilst it's incredibly important to have the support and the backing of a global organization behind us, what really makes the difference is localization. And that applies wherever you are in the world.
I think this is a good point that you raised, Matt, and this is something we discussed earlier as well. Asia Pacific is often seen as one big region, as sort of for Europeans and Americans, sometimes like one country. There are so many different underlying countries, the regulation, the culture, like you bring up, Matt. I mean, you have to have the localization. I think it's completely underappreciated. But we're going to talk about regulation a bit later. Before we go to that, Ben, any views from you?
Well, as you wanted to talk about the regulation, and for me, I also want to talk about the regulation as well. So it's actually referring what Neil just mentioned about in Hong Kong, actually, digital asset has been start regularizing, I think, in June this year. So the framework has been out from the regulator. And from our perspective as a market participant, as a financial intermediaries, for us, we also planning to have this kind of regulator activities in Hong Kong and also to the region, to the clients in the region. Because from our perspective, clients, they feel more comfortable or confident to invest in this kind of innovative products as long as they have been regulated. So from what we have seen is this kind of, especially for digital asset, the crypto, the virtual asset, that will become more regularized and it will become more popular, common in the region. Yeah.
Okay. So let's continue on the regulation topic, because I think we can't get around that, given that we all are part of financial services. Often fintech innovation and regulation, they sort of conflict each other. We have seen increased regulation coming out of Hong Kong, as Neil mentioned. We have seen this in Singapore, as Mario pointed out. So how do you balance between the two? How do you innovate within financial services while making sure that you adhere with all the relevant regulation, and how do you sort of leapfrog, if I may use the same expression, your competitors? Let's start with Ben this time.
Well, the term you're using was conflicting role, which I personally agree. I'm not trying to conflict with the regulator, but I think in order to solve this kind of conflicting relationship, I think the key is to let the regulator to understand the product. Sometimes I think from the regulator's perspective, they wanted to ensure the market, the product is legitimate to the investors. But to be very honest, the regulators, they know a lot about the regulations. They know how to protect the investors. But unfortunately, they might not be too understand about the product. So in order to solve that or to minimize this kind of conflicts, I would say as long as they know more about the products, the nature, then it will be better for them.
But isn't that the tricky part? I mean, my experience with different regulators across the world, and more specifically with MAS in Singapore, is that, like you rightfully point out, they are really good at understanding regulation, but not so good at understanding innovation and the problem you're trying to solve for the client perspective. So maybe the solution is having a conduit, having some sort of agency in between, such as the FinTech Association. Neil, what do you think of that?
Yeah, I think so. The way that if we kind of use the virtual asset trading platform as an example, so they issued consultation, 361 pages, and it basically outlined all the areas that they want to focus in on. FTAHK came in and looked at it, not about benchmarking and doing a Me Too type product, let's say copying what Dubai is doing, so on and so forth, right? I mean, I think what we looked at it is how do you compete, right? Because, everybody's trying to be that global asset hub, and ultimately, how do you commercialize that side, right? So in that context, when they issued that, they put out obviously the overarching regulatory framework, and they said, okay, here's the law, right? The legal and compliance side of the law. And, coming from a Web3 perspective, there's also code is law, right? So there's law at what I call is like top down, which is the law, the regulatory framework, and bottoms up, there's a drone up here, bottoms up is the code is law. And in that context, SFC has leveraged the technology, blockchain technology specifically, and also AI and ML to do that regulatory compliance work. So in the center is really enforcement. In that blockchain space, what they're trying to do is make all of the platforms leverage blockchain. They have to have monthly reporting, using smart contracts, justifying proof of reserves, so on and so forth, right? So this is top down and also bottoms up with the enforcement in the center.
So what my observation with MAS, for instance, is that even with their attempts to innovate, sometimes their regulatory framework becomes overly heavy for small companies to manage. For instance, having a license in Singapore, being a small company, you still have to have the same compliance framework. And with that, Mario, I'm sure you agree, the questions that you get from MAS, the forms, the constant submission of different documents. So how do you manage that? I mean, how do you make sure your business still remains viable while making sure that you adhere to every single regulation, especially if you have multiple regulators across the world?
Yeah, the short answer is you can't. And here's the reason why, okay? Because we are all approaching it from two different vantage points. Entrepreneurs, on one hand, the main job of an entrepreneur is to break the rules, is to go outside of the barriers and to build, to innovate, right? But a regulator wants to keep you within the rules. I'm not saying regulation is not important. I'm just saying the vantage points are different. And to borrow an analogy, right, an entrepreneur is obviously someone who jumps off the cliff and builds an aeroplane on the way down. But a regulator wants to ensure that your plane adheres to certain things first. How's the windscreen? How's the window panel? How's the turbo engine? Before you're allowed to fly the plane. So therein comes the rub because the vantage point is different. But I think where Singapore does get it right is what we have something called a regulatory sandbox. So if you've got certain ideas that you want to test, you go to the government, you go to MAS, and you let them know beforehand, this is something that I'm looking to do. So Singapore has it. I don't think Singapore is the only one who has it. Canada has it. India has it. Kenya also has a regulatory sandbox. UK has a regulatory sandbox. So I think that would be the answer to bridge, having a sandbox to test, because if you don't and you front run certain things, then chances are you get into the bad books of the regulators, which is what you're seeing in terms of where Binance is now or where Coinbase is now in terms of the US SEC.
Okay. Matt, you operate in so many different jurisdictions and you have so many different regulators. I don't even want to know how big your compliance team is. So how do you manage all that? How do you sort of create maybe a bit of regulatory arbitrage even between the different regulators? Are you proactively in front of them, or are you just trying to catch up with whatever they issue?
It's all about engagement. Okay, so be on the front foot, go and talk to the regulator, explain what you're doing, and we found MAS particularly receptive to this. Don't just wait for them to come to you and say you've done it wrong. Actually talk to them and explain why you're doing it, what the benefit for the end consumer is, the risks associated with it, who the target audience might be, who the people you don't want to attract might be. And actually, so much technology lies behind this that if you build your product flexibly in an agile way so that you can make changes in response to the ever-changing regulatory landscape, then you've got a real good foundation for growth. And you can then deploy that on a global basis, because a lot of the regulators take the lead from one another, they share information. Nobody's really out there doing anything fundamentally different. A lot of them have the same desires, the same consumer protection at heart. So if you build flexibly, if you engage, I think you're in a very good position.
Okay. I'm just going to open up the floor for any questions, because we have actually quite sizable audience. Does anyone have any questions for the panelists at this point? Everyone's very shy. Let's talk a little bit about digital assets, because that has come up a few times during our discussion. Digital assets obviously have been around for a long time. We've had all the hype and blockchain being the sort of lead instrument. Now there's a bit of less talk around crypto because obviously the market has turned, but nevertheless the asset class as such is here to stay. And we see it in different shapes and forms, be it even central bank digital currency. What are your views? How is digital asset as an asset class developing? How is trading around that developing? And what are the trends for 2023 and beyond within that sort of more narrow sector? Neil, maybe we start with you.
Yeah, sure. So if we kind of look at that, obviously Hong Kong is going into the virtual asset space. And not only just doing professional investors and also institutional investors, but expanding into the client base, into retail. Many of the other jurisdictions are taking a step back. And if you kind of look at the sort of US situation, it's quite tenuous right now. So what we see inside of that is, number one is developing this as a overarching wealth portfolio. I mean, we're looking at it from that perspective because, like I said, we have like 4.5 trillion. 1% of that, of course, everybody always talks like, put in only 1%, and some guy goes like, all right, I'm going all in, right? So, but But ultimately, what we're trying to do is have that type of asset class available to all of the types of investors, right? So I think that's number one. Number two is inside of the context of central bank digital currencies that you mentioned, CBDCs. That's a huge trend. Hong Kong has initiated an entire trial inside of that. So of course, Hong Kong has two different areas of expansion inside of CBDCs. Of course, eHKD and also eRenminbi. Both are doing different trials right now. Specifically on Hong Kong dollar, there's 16 different trials that are going on right now, specifically inside of payments. So standard plain vanilla payments, time-based payments. We've got different people inside of it, Bank of China, Standard Chart, HSBC. We also have Visa, we have MasterCard, and we also have folks like Ripple inside of it, right? So Ripple is doing a tokenized asset. Tokenized real estate is what they're trying to do in conjunction with one of the TradeFi banks. And if you kind of think about it, it's like, Ripple's been under SEC lawsuit past few years, and now all of a sudden inside of Hong Kong, they're on a trial. So it's very interesting how these trends are being taken up by different jurisdictions that have a different view in terms of the regulatory framework, right?
Yeah, it's fascinating, and I think we saw PBOC or People's Bank of China testing with digital yuan probably in 2020, 2021, and sort of injecting liquidity into certain pockets of the economy. But what that allowed them to do is to have controlled duration of that, whatever issuance it was, maybe it was 1 month, 2 months, and also specific use of that yuan. So thinking from a central bank's perspective, wow, isn't that a great way how to have effective monetary policy? Because effective, you control everything. You know how long you're going to have the duration, where you're going to use the money, and obviously it eliminates the problem you have with money laundering. Intrigued to see how this will span out in the US, of course, with the dollar being weaponized, if I can use that word. And now many central banks becoming slightly worried, like, should I hold USD? What should be my exposure to USD assets, especially if you have friendly relationships with US, I don't want to say enemies, but let's just say their conflict partners. Mario, what are your views on the digital assets? Because Singapore, again, is a big hub. Used to be a big hub, now it's a bit smaller hub after MAS stepping in again with regulation.
Yeah, so I look at digital assets and cryptocurrencies in a framework of a larger macro view. So let's call that online trading. And in online trading, there's so many different sectors, right? You have your currencies, you have your stocks, then you've got your crypto trading. There's a fun fact. There's another report that I look at. It's called the Bank for International Settlements, BIS.org, if you guys want to take note of this. They do a survey once every 3 years. In terms of daily traded volumes, and because they have to look at all the different central banks, it takes once every 3 years for them to amalgamate the data. Numbers are steadily increasing, guys. So that's good news, right? In 2016, the daily traded volume is about 5.1 trillion. 2019 is 6.6. And just last year in 2022, it came in at 7.5. So numbers are increasing from a macro view of online trading. You can test this out. I made some of my guys do this. This is interesting, okay? If you type Taylor Swift, just type Taylor Swift on Google. Today you can go do that. You see like 400 million searches. Everybody knows Taylor Swift, right? My daughter, Taylor Swift, Taylor Swift. You type the word Ferrari, you have like maybe 500 million searches. Guys, you type the words online trading, which is already just 2 words in itself, it comes in at 6.7 billion searches. So Taylor Swift, 400 million, Ferrari, 500 million, online trading, 6.7 billion. Now that gives us a lot of confidence. What does it tell you? Everyone is searching for it, right? So that's good news. So in terms of where we are headed to, at least the next few years, it can only increase. So that's the part I think for all of us players in the ecosystem. I think there's going to be a moral imperative that is important coming up, especially for the captains of the ships. I think that's important, that I do want to share that. Doesn't mean that if we can do something, we should be doing it, right? So the moral imperatives for certain things that when we innovate, I think has got to be part of it. In terms of volumes, it's all there. No stress, no worries. Everyone is trading and more to come but moral imperatives, I think, is a big topic, probably outside the scope of this discussion, but just something I wanted to throw out there.
But Mario, what do you think? I mean, 2020 saw a massive spike in online trading, right? Especially on the retail side, and lots of debates. Why did you have such spike? Were people just bored because they were home? Didn't have to go to work. Was it because the government stimulus that came in? Everybody, well, not maybe in this part of the world, but in Europe and in the US, suddenly had a lot of stimulus at hand. So now with COVID over, people back in the office, stimulus checks not coming in, do you think we're going to see the same exponential growth? Has the people's mindset shifted now? Is there more interest in online trading? Or is this just a generational shift whereby people want to have more ownership of their own financial future, not relying on government pensions or, God forbid, maybe payslip?
Yeah, the quick answer is this, right? In 2020, it's a perfect storm. Exactly those two reasons that you mentioned, Kaya, which is number one, all the governments pumping in money into the system. Singapore itself pumped in 100 billion, right? I'm sure the ECB, the Fed Reserve, Australia, everyone was pumping money. And we all know this today. Whenever governments pump in money into the system, it tends to find its way into the financial market. So that's the first key thing. The volatility that we saw in 2020, primarily because of the money that's pumped in. We are paying the price now because of inflation, all right? So the price we're paying now is what happened 3 years ago. That's the first key thing. But the perfect storm was number one, pumping the money into the system. Number two, people are all work from home, safe distancing, all the home initiatives. Even like for me, some of my staff, they work 2 to 3 days from home, right? And I'm fairly certain they would have a bit of time on their mobile devices. So that being said, so that we understand where we come from in terms of context. But will it die down? I honestly feel the answer is no. Here's the reason why. Everybody's disposable income is getting lesser. You are feeling the pain, I'm feeling the pain. Your oil prices are going up, your food prices are going up, right? There's so many things, prices are going up. People are looking for initiatives on how we can make alternative income. So I feel it will just continue to accelerate rather than just being a one-hit wonder.
Okay. Matt, do you have any objecting views? Because I know your company does not have that much exposure to digital assets. You don't support that. So what's your perspective?
So we obviously have CFDs in various alternative currencies. But going back to what you talked about 2020, it was really interesting to see the geographical distribution of our trading volumes and how that changed. So the regulation in the UK, the EU, has brought in leverage restrictions and prohibitions on retail customers trading certain types of asset, less so in the other markets in which we operate. So in the UK, EU, we saw a huge amount of index business. Certainly in Asia, we saw huge spikes in our gold volumes. So again, it's about personalization and what we want to try and do on each of our different jurisdictions and what we want to do locally. Again, it's going to be a different product offering for each different market. So whilst we don't have huge exposure to this, in the markets where we can operate and we can do so successfully, we will continue to put resource and energy into those products.
Ben, coming to you. You have a lot of exposure to digital assets, so I'm sure you're going to agree with Mario and Neil.
Well, put it this way, for Cisco Asia, in Hong Kong, we have no exposure to digital asset. But for our parent company, Cisco Bank, we have exposure, obviously, and we are actually the first European bank that offer digital asset trading, I think back to 2014. But as we mentioned earlier, Hong Kong is start regulating digital asset trading. And for Hong Kong investors specifically, I personally will say that they are more traditional. They're more focused on traditional assets, say securities, futures, this kind of traditional asset. But as I also mentioned earlier, when the product, I mean digital assets start regulating, people feel more confident towards this new product, and it will take time for them to build up the interest on that. So in terms of the digital asset trading, I think it will be picking up slowly from Hong Kong, or I would say that it will become more popular, and at least it gets people to know more about this product. So I'm pretty optimistic about the digital asset, even though we are still in a crypto winter, that we were talking about the same topic in the last year in the same panel.
Yeah, I mean, a good indicator being the taxi driver or the shoe cleaner indicator is when the conversations become so common that the average Joe on the street wants to talk about it. It feels to me that crypto is way beyond that already. I mean, the people don't want to talk about it anymore. But I tend to agree with everyone with everyone on the panel. I think the asset class is here to stay. And again, regulation probably gives retail a bit more comfort that there is somebody looking after it. It's not Wild West anymore. I want to talk a little bit more about other trends that maybe your respective companies have implemented. So we've spoken about regulation, talking about blockchain, spoken about digital assets, blue bonds, green bonds, so many colors. If you don't know what these are, feel free to Google. Let's see how many answers we have for green bonds. But what are the changes your respective companies have implemented, or what are the changes every fintech company should implement to make sure they remain competitive? And you can't say ChatGPT because this has already been discussed. I'm going to talk about it tomorrow on a panel as well. But what are the other developments in the industry that allow financial services to remain competitive? Let's start with Matt.
I think it's about offering a multi-product solution to your global customer base. People don't really want to have to go to provider A for a certain product and then provider B for another one. Actually, if you can put everything into one ecosystem, everything cross-margin, so that you can see your portfolio in real time, some higher risk assets, some medium, some lower, you're building a proper portfolio that you can actively manage. And a lot of this actually goes back to COVID, where people wanted to try and take a bit of control of their own destiny in one area of their life and give themselves some financial independence. And we're seeing people increasingly put more of their disposable income into investable assets, not just on the leverage side, but a lot of the simpler assets, so the equities as well. So giving people what they need all in one place, and not being afraid to try and cross-sell products, not being afraid to target new products. I think the return of inflation will see an increase in people looking at whether it's index-linked or interest-bearing instruments as well. We had the enormous boom in equities and meme stocks. I think inflation will change that, and I think that we're going to start to see a lot more of carry trade type business as well. So giving people what they want and having your ear close to the ground, not just sort of kind of talking to people in the industry, but actually talking more widely, really understanding what's going on in society, that people need to have interest-bearing and actively income-generating assets as part of a portfolio.
Does this come with educating your clients, proactive communication?
For sure, absolutely. People really, they don't want to feel that there is a 75% chance they're going to lose their money. They want to try and take control. They want to try and educate themselves. And then interestingly, we saw that over the course of 2020, that people did get more successful. They were better traders. They took a longer term perspective. They weren't just kind of in and out instantaneously. So people were really demonstrating a lot of sensible behaviors with balanced and sensibly managed portfolios rather than just lumping into one instrument and kind of hoping for the best.
I'm going to challenge you on that, Matt. I mean, it's a great point that people made money in 2020, but if you look what the markets did in 2020, everything was going up, right? So even buying S&P 500 and staying long throughout 2020, okay, maybe let's say you got long in March 2020, that wasn't that difficult trade. So what's your view? I mean, especially now when markets are volatile, how do you educate your customers, especially when they've been burned, when they've lost money? I mean, when I see my account in the red, I don't want to even trade anymore. So how do you manage that?
I think people have got a better understanding now of how leverage works. And just because somebody might offer you 1,000 times leverage on whatever it is, maybe not a sensible thing to do on your entire portfolio. So people are getting better at risk management.
Okay. Neil, interested to hear your thoughts because you effectively work with such a big pool of different market participants. How do you ensure that your constituents, if I can call them in such a way, stay ahead of the curve? Is there a lot of education involved as well, or do they tell you what they are up to?
It's a little bit of both. I mean, so when we kind of take a look at it, the FinTech Association focuses in on advocacy, talks about collaboration, and also education. So the truth is that we're working in terms of education, not just only on the members, but also to the government bodies as well. A lot of them are not familiar with Web3. A lot of them are not familiar with digital assets. There's other different types of technologies that need to get familiar with, whether it's AI. I know you said no ChatGPT, but those different things, right? So definitely a lot of education inside of that. But I think one of the key trends right now is, of course, what is happening inside of the markets, right? I mean, if you say, from taking on a sports analogy, like, do you play the ball or do you play the man? from a product perspective, you're playing the ball. Okay, I need to offer this type of product set and so forth. But if you're going to play the man, you have to understand what the geopolitical situation is going on, right? And that isn't to say that, okay, fine, it's banned, let's say crypto is banned in China, but it's legal in here. But looking overarching is like all the different market moves, whether it's talking about the partnership inside of Saudi and Iran and so forth. So a lot of these different things influence the market and the movements of the markets. If you talk about 6 to 12 months ago, China was an uninvestable market. Now, guess what? The narrative has spun around and they're like, we're going all in. Now, the other way is just, I think in the last 24 hours, there's an announcement by Blackstone and also Fidelity that they're offering a digital asset trading platform. What happened in that situation, and Binance getting sued and so forth? I mean, there's a lot of things that are happening inside of the marketplace. So, of course we have to play the ball, but we also have to understand the man and the markets and what's happening inside of it from that perspective, right?
Okay. Mario, share us your views.
On Fullerton market side, we are definitely investing in building what we call a fintech ecosystem. So that comes up broadly in 2 or 3 different initiatives. Number one, investing in our partners. I think that's important. At the end of the day, while we can be forward-thinking and innovative in terms of the products that we lay out, I think one key thing, especially in Asia, is this one word, guys, called relationship. We've heard this sentence multiple times. People don't care how much you know until they know how much you care. And it is true. It is true. Clients are not always going to be making money. But if they know that you have their best interests at heart, they will stick to you. So scalability, while it's important from a business perspective, sustainability as the undercurrent, I think, is even more important. So I think that's the first one, investing in partnerships so that we get to know one another. We truly understand each and every side, right? So that's the first thing. Number 2, we are building our own back-end infrastructure. So in terms of proprietary technology, where certain things that we are offering in terms of assets or in terms of a CRM system, while we do leverage and work with many industry partners, we do want to be in a position to be building our own prop technology. And again, I'm sure we're not going to talk about ChatGPT, but the last thing, I think leveraging of AI tools is important. It is important. ChatGPT just being one of them, right? But the more we can leverage of such tools, I think efficiencies will be a lot faster as well.
Okay. Ben, share your views. What do you think? How has your company kept itself competitive, and what could other companies do?
Well, I mean, we got the request or demand from our clients about the payment in relation to payment solutions. And honestly, a lot of our clients from the region, they have some difficulties doing the payment. And I think some of our panelists have mentioned about that. So I think that's the same problem we are all facing. And one of the solutions, I'm not sure if that's the only solution or the best solution, but one of the solutions is to have like doing the payment solution via the crypto or via the digital asset. And I think this is one of the way we, Swissquote, is actually doing. And we believe that this is one of the ways to provide the easiness to our clients when, put it this way, if the clients, they could easily deposit, if they couldn't deposit or if they couldn't withdraw money from your platform, from your company, there's no way there's no interest for them to continue to trade. So I would say, as long as we could provide the easiness about the payment solution, and then clients could continue to have the interest to invest in the market. And what Matt just mentioned earlier about the multi-product, I think that's also a key that Swissquote is actually doing, and we really focus on diversification because the market is so volatile, and if we only limited our products to 1 or 2 certain asset types, then actually clients cannot diversify their risk. And I believe having different asset class product types to our clients, I think it could also minimize the risk of our clients as well.
The payment stopping is close to my heart because I observe we bank with a couple of banks in Singapore. USD transactions cost us $40 to $50 per transaction, even if the transaction is $40 or $50. So I think you hit the nail to the head with that particular comment. We're coming to the end of our session, so we have about a minute left. Just going to open up the floor for any questions. There you go, gentlemen in the front. with a microphone as well, so everybody can hear.
A little bit earlier, Ian mentioned about central bank digital currencies. Do any of you guys see central bank digital currencies as a real possibility that it can even happen? And if so, in how many years?
I'll let you go first.
Yeah, sure. If you kind of look at the again, playing the ball, playing the man type scenario, you look at the agreement that's been signed between Iran and Saudi. What is that inside of the context of the markets is about China's energy security. And when you talk about the challenge inside of the petrodollar, those different trades will ultimately be facilitated inside of RMB. And that was where the CBDC will come into play.
Mario?
Okay, so for CBDC, right, bro, your question. Okay, for CBDC specifically, firstly, it's not new. If I'm not wrong, by this year, at least 20 central banks will be issuing already. It's not new. But here's the thing, I don't think in terms of our lifetime, if you talk about, is it going to be an emerging trend? Is it going to totally replace fiat? Not in this lifetime. Not in this lifetime. And I'm going to give you an exact example for us to study. Look at China. China didn't just launch CBDC this year. They've been working on it for the last 9 years, man, guys. 2014, they started already. But let's look at the stats. Today, China, as an example, China is a country of about 1.4 billion people. As much as 70% of the entire country, close to 1 billion people, are already using mobile payments. But do you know less than 17% of them, under 300 million people, actually have a digital yuan wallet? It's already rolled out, the yuan. But they're not biting. They're not biting. So payments are there, but CBDC, in terms of the actual rollout, not happening. So is it going to be a emerging trend? Maybe, but I would say not at least in the next 10 or 20 years. It's just not going to be replacing fiat currencies, bro.
Okay, thank you. That was my question.
Go ahead, guys, if you have any views.
Well, Bank of England announced plans for a digital pound. That seems to have quietly gone away. Nothing much happening there. So again, just one example, but it's not happening quickly, for sure.
Okay, perfect. I think we're out of time in that case. Thank you so much, everyone, for joining the panel. Thank you for listening to us. And thank you, iFX, for organizing this.